Let's welcome on board Chakri Lokpriya, who's joining us on the show as well. Chakri, hi. Tomorrow, of course, is the numbers from HDFC Bank. The street is fairly excited, and the stock price too. What's your own expectation as to what we should watch out for HDFC Bank, and what does the future hold?
HDFC Bank, as we all know, has been treading water for quite some time now on the not fear, but a little higher than expected credit costs and lower than expected volume growth. And also now the companies, so going forward into tomorrow, I guess, if they show some kind of stability in credit cost growth, which is, probably they'll deliver kind of an inline number. And as far as volume growth, positive surprises are unlikely, given that they probably want better margins and lesser volume. So given all that, the stock has valuation wise, I think it's okay, but I wouldn't really go after and take a big position in HDFC Bank.
Chakri, so where are you using decline to your advantage to add more stocks?
If you look at basically the current earnings trend and management, when they come to you, it's all in the industrial space, infra, automobile, auto ancillaries, and of course lately there's some of the deep cyclicals like metals. This is where most of the earnings upgrades are coming from, and so and so therefore the comfort is there, because once statistically the earnings start upgrading themselves, it usually becomes a multi-quarter phenomenon.
Okay, let's see whether it becomes a multi-quarter phenomenon or not. But for now, just taking stock of the big buzzers, Force Motors pointed out is up 12%, and overall auto pack with M&M, Maruti, etc. do quite well. And in fact, Chakri, there are brokerages which are talking about levels of 14 to 15,000 on the Maruti stock now. Would you concur with that view?
Maruti as a company clearly rising aspirations and all those well-known story. The launch of their new EV models a couple of years down the road, and that segment, that price segment, is actually quite vacant in terms of on the higher end you have now the Teslas will come in, the players, existing players, the foreign players who are already there are there. But in this mid segment, I think they have the most credible range of lineup. So I think clearly both their IC and as well as their new models, very strong outlook, and therefore it can buy.
Well, it's a bit of a nostalgia moment, at least for all of us at now. Etina today celebrated BSE. It was more like a grand tribute to India's oldest stock exchange. We had the honors of ringing the bell at Bombay Stock Exchange with Team ET now, and the two real daughters of Indian financial sector, Hemendra Kothari and Kiki Mistry, and then the CEO of Bombay Stock Exchange himself. Hemendra Exchange, which then became BSE.
Okay, so that was that moment of nostalgia. BSE, the oldest stock exchange in Asia. So definitely a big day, and the bell ringing right there at ground zero. But for now, Nifty around that 22,150 mark. And of course, we have numbers that we're anticipating from Wipro today. So I'll quickly run you through the expectations after disappointment coming in from infosys as well as TCS. TCS wasn't really a disappointment, but the top line was a bit weak. For Wipro, we're expecting that there's going to be a constant currency decline of 0.2%. Margins are expected to be largely stable. Remember, BSI vertical has been weak for Wipro, so commentary on that will be important. Deal might be a bit muted this time around because there was that sudden change in leadership that happened, where in theory Delaport actually stepped down and Mr. Pillai had actually taken over. So that's something the street will watch out for in terms of what the commentary from the new CEO as well as the Q1 FY25 guidance is something to watch for. Chakri, you've been tracking this space very closely, and there is a very clear disparity in terms of what TCS has reported as well as what Infosys has reported. And also, if you look at the guidance for the coming year, Infosys is talking about just 1 to 3% kind of growth, whereas TCS at least has said that FY25 is going to be better than FY24, which clearly pegs TCS at a higher growth rate versus Infosys.
Yeah, if you look at, the expectations of the 3 to 6% growth, what happened in the case of Infosys, and it's combination of both these one-time issues. But I think the broader theme for the entire sector still remains that discretionary spend still continues to be weak. The order book continues to be strong, but the order book is not converting into revenue. Some amount of margin benefit, the whole sector will benefit because of the fall in rupee, increased utilization, a lower bench. All that will work in their favor, but pricing clearly is not in their favor, given that the rupee is anyway fallen. Given all these things, I think it's an incremental story in the case of Wipro tomorrow. It's incremental negative. They're going into with the new CEO, old CEO, etc. So the whole sector in general and Wipro in particular wouldn't really buy the sector now.
The sector right now waiting for the right time, but in the meantime, a lot of price volume buzzers in the trading session. Let's take it across to Ansh to get that detail. Hi Ansh, tell us which are the list of stocks which are buzzing up.
Hi, so Lupin will be the first stock in focus. As you see in the chart as well, the stock was stuck between a consolidation for 16 sessions, and today the stock has given a breakdown from this consolidation pattern, touching 2-month low level as well. Apart from this, Raymond will be in focus as the stock has actually given a breakout from its key resistance zone with volume of over 5x its 20 session average volume, which indicates good participation in today's breakout, and it has also touched 7 high level on intraday basis as well. Lastly, Motilal Oswal will also focus as stock has actually surpassed above its key pivot high of 2120 level, touching record high level, and the move was mainly backed by high volume of over 3 times its 20 session average volume. So keep an eye on the stocks.
Okay, we absolutely will. Kunal, any view on these top buzzers that Ansh pointed out? Motilal Oswal, which is actually doing quite well, and then of course Force Motors, TVS Supply. Some of these names are definitely doing quite well in at a time when the rest of the market is in a bit of a dizzy still.
Yeah, so that itself tells us, Nisha, that the markets are not going into a very major kind of a sell-off mode like what we saw in the month of March. Because in the month of March, literally 8 out of 10 stocks, or maybe 0.5 out of 10 stocks would probably have been going into a downward trend. But this time it's completely different. In fact, even if you look at, say, for example, today morning, a lot of many mid-caps, mid-cap names and maybe the higher to larger cap stocks, which are still trading above their March lows for themselves. So that itself tells you that the selling was concentrated towards few specific names, few specific sectors, and few of the odd larger cap names. So I think that now is seemingly behind, and we could now be at a point when the stocks would probably see a stronger follow-through up move. So the likes of, for example, Oswal, almost 4 consecutive months of price uptrend for the stock, which we've seen from I think 600 or 800 is where the rally started off for the stock. TVS supply chain could be something interesting because the stock last I think 6-7 months or so had been showing a very major kind of a downtrend. So this kind of a strong up move, 15% plus up move for the stock today could probably negate that kind of a major downtrend and probably be an indication that a stronger trend could be in the offing for the stock.
Okay, that's the take coming in on the market mood right now. But let me now pass it across to my colleague Ajay. He's of course at the BSE in conversation with the BSE Chief Regulatory Officer. Ajay, take it away.
Nisha, it's a very interesting day. A lot of action happening in the market, very sharp recovery after a brief turmoil early in the day. And this is a special day because we are celebrating BSE Day right here from this historic and legendary hall at the Bombay Stock Exchange. Earlier in the day, we had some legends from the market and corporate India along with the CEO of BSE. Now I have with me Madam Kamala, who is one of the prominent faces in the world of finance, which is still seeing very gradual improvement in participation from women, but she's doing a fabulous job of the Chief Regulatory Officer here at BSE. So thank you very much for joining us on ET Now today at BSE Day.
Thank you, Ajay, for this opportunity. Happy to associate with you in this program.
Great. I was very impressed to know that, even now on ET Now, we are always taking this message forward and encouraging a lot of women to participate in the in the world of finance. But it is very gradual, though there is progress being made. But you chose to, join the world of finance, stock market, regulatory 2-3 decades earlier. So you've seen the entire journey. You've also seen the journey and evolution of Indian investor. In today's dynamic, world, how do you think the life of an investor has actually changed versus last few years?
So if I just recall 3 decades ago, life of investor was very, very different. Not many people knew what stock market meant. People also thought market was for very select few. It's a closed kind of a market and things like that. Accessing market was not at all easy in those days because size mattered the most. But with all this technology coming into picture, our markets are now at the doorsteps or at fingertips of the investors, because today you can trade even using the mobile technology. So I think we have seen a great transformation in terms of making our markets accessible to retail investors. And it's a tremendous journey because in those days, people used to really scout for a broker, or if you were not part of a Mumbai as a center, then you would really find it difficult to even connect to a broker. Forget about investing. Today, everything is at your doorstep. That's clearly a transformation which technology, regulators and stock exchanges together have collaborated to make it happen.
Excellent. In fact, yes, there is a transformation happening in the participant side as well in the market. Earlier, the dominant players were the FIs and the DIs. But now we are seeing a third dominant front emerging, which is the retail investor. And we see the data is on the table in terms of addition of retail investors and new guys coming in the market. But when we interact with this bunch, sometimes we get a sense that making short-term money, that is one objective. Then there is the other objective of making wealth, of creating wealth. How would you, with your rich experience and of course the role which you're playing, what will your message be to both the pockets of the participants that you're training in now?
As you rightly said, Ajay, market has different constituencies. In the marketplace, there are arbitrators, there are speculators, there are investors. All three are important components, and nothing is superior or nothing is inferior. It's just that the mindset required for dealing with each category is different. And for speculation, the mindset that you need to have, the psychology that is needed, and the awareness about what is happening around you is quite different from an investor who once parks his money in the asset class that he is looking for. The psychology required there is different. What is the objective or your goal for which you are entering the market becomes very, very important. And arbitrages, as you know, are looking at price differential between marketplaces. So all three constituencies together make a market. And as a retail investor, if you are entering, you should be clear in your approach. As an investor, what is that I am looking at? Usually what we have found in our experiences, investor at the time of entry thinks that he is entering the market for an investment and a reasonable return and for a mid-term and long-term outlook. Somewhere down the line, they get distracted and get tempted to look at day trading where they are not empowered, equipped, no? They are getting into that area. So that is where the challenges are. So I would advise all investors entering to first know what is the bucket in which they are entering and also the time horizon that they are looking at when they enter the market.
So there is Pashupati, there is Kunal, Nisha and me. I'm going to ask this question to everybody. Kunal, what was, when you started trading for the first time or when you understood about sensex and nifty, what was the level of the sensex and when was it? When was it?
So I started off in 2007. I think it was the month of January. I'm not sure the level of sensex, but the nifty was I think around
sensex.
6. I think it was around 7,500, 8,000.
7,500. Chakri, what was the level when you started investing, sensex level?
Yeah, I don't remember the number. I started in 1996. And from then to I actually don't don't know the number from then to now.
Naresh?
Started back in 2004, in May 2004. It was around 4,000 to 5,000 sensex. And just when I entered 2 weeks later, we saw the Black Monday, 17 May 2004.
What about you, Nikunj? When you started tracking markets?
2000 is when I started my professional career. Of course, I come from a business family, so the chatter of the sensex was always there. But what I can recall in terms of tracking, I think it's from 2000 onwards, the sensex was at about 3,500, 4,000.
Wow.
Went up to about 5,500, and then 6,500 actually peaked in 2001. That was 14th of Feb. And then it was a straight line fall. My first day in Mumbai, when I started in 2003, Infosys gave a profit warning. And the sensex had plunged below 4,000. So that's the way it is. Now just think about it. I mean, what is the power of compounding? The power of compounding is that if you just held on to the index, did nothing else, and you said, I'm just going to keep focus on the index. What have we seen in last 20 years? We've seen assassinations. We've seen change of government. We've seen COVID. We've seen demonetization. 2008 GFC crisis. But ultimately what has triumphed is the human spirit and the ability at which humans can actually innovate. And that is how some of the great Indian investors and global investors have made money. We think in terms of decades. And that is the time advantage, the patient advantage which they have, where they let the power of compounding work for you. And I distinctly remember when I started talking about the number of 50,000 on the sensex, it was almost like an unimaginable and a far cry. Today when I asked, Ramendra Bhai and Keki on where they think markets are headed, the sense I've come back with is 3 to 3.5 years, maximum 4 years, the index could actually double. So 1 lakh may just be a pit stop. What may look like a magical number or what was almost like a dream number. It was unfathomable at 4,000. Can the index actually become 1 lakh? The fact is that is how it works. Chakri?
Indeed, now I did a quick check, and it was about 4,000 when I entered the market in around 96. And then I remember the next 2-3 years actually went through that 1998 crisis, global slowdown, and the market actually had crashed. And it took quite some time to recover. Then, as you rightly said, that look where it is today. So it's compounded by probably 20 times from that time period.
Yeah, good amount of compounding is what we have seen, and the big news is it's not done yet. We are definitely not out of that bull run. If you look at the stock markets right now and the kind of run we have seen today itself, that will tell you that we are still in midst of that big bull run. In fact, the other big event that we are watching out for is, of course, the elections. We did speak with a whole host of experts as to how you should probably look at the volatility of the elections. Listen in to the bites coming in from market veterans on elections and the importance for the Indian markets.
I think that the next major event to look out for is the budget in July. I think, look, the election is also very important, particularly from a foreign investor's viewpoint. I think the domestic investor base has already concluded and acted upon that conclusion regarding elections. But I think amongst foreign investors, there's still a large segment which wants to see the event behind us. They're prepared or have been preparing to act. They want to see the event behind us before taking action.
Maybe some amount of, disappointment or euphoria around that, because normally it happens, right? Elections are one event that happens once in 5 years, and there's a lot of rumors going around, a lot of people giving out their thoughts. So it's going to be fairly choppy around that time also. However, don't forget that immediately after the elections is going to be the central budget, which is going to be presented. I think sometime in June end or July beginning. And that will actually, as Sabir has rightly pointed out, I think we believe that is going to set the trend for the next couple of quarters.
It's turning out to be a decent week, given that so much of news was thrown at markets this week. You had the comments from Fed, you had local numbers to deal with, market reacted to infosys numbers, and then if that was not enough in the morning, all the confusion and chaos around geopolitical crisis. So on a week where a lot of news has come, I think we've done rather well for them ourselves. We went below key levels. In the morning trade, we popped right back up. So for me, I think this week's price action, Kunal, is more than just satisfactory. It is actually promising. Am I right in saying that?
Absolutely, yes, Nikunj. And I think, we started off the week on a much more positive note, but we are ending the week on a much more, believable that, the markets are not going into a very similar kind of a, tailspin which we saw in the month of March. Because in the month of March, it was very difficult to try and, fathom where the indices or whether stocks would probably try and bottom out. But this time around, the sell-off has been completely different. And it's been affecting just about few odd sectors, few odd indices largely, and it's not affecting the major or the entire market as such, like what we saw in the month of March. And I think that's what the belief and the sentiment on the positive side could probably be the takeaway for this week.
Okay, point taken. In the meantime, it's TCS, which is the biggest drag on the index right now with a cut of over 1%. It's a cut than actually infosys at this point of time, and L&T too is dragging its feet a bit. But the other big event to watch out for, Chakri, apart from the barrage of news flow that we had to deal with this week, is of course that much awaited Musk visit in the coming week, where Elon Musk will come and perhaps announce a whole host of investment for the Indian EV ecosystem as well. What do you make of that, and which are the stocks which probably one should keep on the radar with respect to this entire EV transition?
A lot has been spoken about his visit, Elon Musk's visit, and clearly Elon Musk is coming in at a price point. Tesla is coming in at a price point which is about the 35 mark, so it doesn't really impact the Marutis of the world. So therefore, the benefit for Indian listed auto companies of any big market share is it doesn't make an impact at all. What is positive is for the auto ancillaries. The bearing companies will clearly benefit, depending, because they're usually the more easier parts to outsource. Companies like Timken, SKF, these companies, not only work with export companies, but they're also very strong, and they will also benefit from other industrial activity picking around them. Second is, companies like Minda and all the wiring companies, they'll also benefit. The list is actually building up. So I think hopefully if there is a real announcement, then you can see further trades in all these companies.
Chakri, what do you think is the best player on EV?
In EV, I think, all these, for example, these auto ancillary companies, whether the Indian EV market share, their revenue base, whether it takes off or not, if you take a company like Timken or even SKF, they have a fairly good existing export order book. Now, the hope and expectation is, their domestic bit of the EV bit will also start taking off. Now, so it doesn't matter as long as the company has both avenues, export and domestic. So this companies fit that bill. Second is, again, it's clear that it's not going to be EV replacing ICF at least for the next many, many years. So as long as they have a strong market flow, market products for both the segments, again, these two companies and such other companies, I think that's the approach, which is not clearly bet on things which don't make products or products only for EV, but also both.
Bombay Stock Exchange also, Ajay, of course, at the Bombay Stock Exchange with the COO of Bombay Stock Exchange. By the way, Bombay Stock Exchange or BSE, the stock has done rather well for itself. That's Nifty for you, and 35, the sensex for you. The stock of Bombay Stock Exchange, which is BSE, is about a 10x from Kodo. Chakri, there's a theory that winner takes it all. And BSE had lost market share, but look at the comeback. To find a stock which has given similar kind of returns in the last 3 years, it's a 10x.
Indeed, and in fact, it probably went up about 4x, 5x just in the last less than a year or so. And it has been one because of all its past, it had lost market share, etc. The stock was derated, multiple had come down quite dramatically. Companies' fortunes turned around, some amount of market share, and plus the margins, more importantly, in a business which is highly commoditized is improving. Range of products, etc., are improving. So I think, it's done a phenomenal run, especially in the last 1 year. But I still think there's a good amount of upside in BSE, the stock.
Probably available on BSE. Just wanted to highlight those updates coming in on Axis Bank because it's a very smart recovery that we have seen. Remember, we started off with the news flow coming in that the company has informed exchanges that they're looking to probably mull a fundraise as well via various options, including a QE. At that point of time, that stock had suddenly slipped 2.5% because the worry was about equity dilution. And now Nomura has come out with a note saying that the company, or rather the bank, will be evaluating potential equity capital. And that, if does happen, would come as a surprise. For 300 basis point of extra CET1 ratio, if the bank needs, it will have to raise 9,900 crore rupees, and an equity supply risk could be a near overhang for the share performance. But for now, Axis Bank has materially come off the highest point of the trading session. Before I hand it back to Ajay at BSE, let me quickly take the BTSC trades from our chartist. Quickly, your BTSC picks.
So 2 buy calls. The first one, Bajaj Finance, targets of 72.20, stop loss at 6,900, and Escorts is something which is looking attractive as a fresh breakout, 3,205 as a target, stop loss at 3180.
Duresh, your picks?
Could be a buy on M&M with a stop loss at 2040, target price of 2120. Could be a buy on IDFC Limited with a stop loss at 121 and target price of 127.
Okay, time now to hand it across to Ajay for the closing bell.
Well, that's correct, Anisha. Right here at the closing bell, just seconds away from the market closing. It was a very eventful day as far as the markets go. And of course, now because we celebrated BSE Day. So let's do the market closing with Kamala Madam. Okay, let's start the bell. Just a few seconds coming in. Your watch is already 30, right? Okay, just how many seconds? Okay, let's just...
If you like this video, then like, share and subscribe to ET Now.